Hi Max. How are you doing?
Not too bad, Vyasa. How are you doing?
I'm good. I'm good. As usual, lockdown and all, and we are all getting used to it. It's already been 3 weeks now. How is it in Hong
Three
Kong?
weeks only for you guys. We've been 2 months plus because it started from this part of the world. We are at the Dragon Head.
Right.
So when it exploded in China, Hong
Yeah.
Kong clearly was very nearby, so we got hit quite quickly.
Right.
So we started this lockdown. Ours is not the complete lockdown like you guys in KL.
Yeah.
Ours is semi-lockdown, very much self-discipline.
Right.
So we started this just around Chinese New Year, actually, end of January. So we're now February, March. So I stopped counting already because it's been so long. 2 months plus for us. So for you, it's 3 weeks.
3 weeks. About three
Yeah,
weeks now.
we
Yeah.
are we are probably ninth or 10th week already.
Wow.
And,
But
and the
yours
good
is not.
news is, last 2 days, the
Yeah.
numbers have really gotten very, very nicely down.
Wow.
So we've definitely flattened the curve already.
Yeah.
That was probably a few weeks back, and the
Right.
last few days is down to single digit.
Wow. Single digit.
Mm.
Wow. That's a good sign. Actually, it gives us
Shame,
hope.
we're looking forward to get out. Seriously, we're looking forward to go do something out there again. So
So
it's fantastic.
what was it different? Like I mean, I think Hong Kong the numbers were sub 1,000, if I'm not mistaken. The
Just got past 1,000 yesterday, actually.
Okay.
But the numbers, as I said, is about now every day is going around 5 to 10 cases, new cases.
Wow.
I guess the big difference is that we went through SARS, and SARS was quite it kind of got quite serious in Hong Kong. So because of that experience, it's created awareness in us in Hong Kong generally. And then when this came, we were very quickly going back into a discipline that we used to have during SARS. And there wasn't much government measures in Hong Kong. That's a good thing. We,
Right.
we didn't we didn't need an MCO, so to speak, in
Right.
Malaysia.
Like in
We
Malaysia.
were just going, all right, okay, virus is here, we know what to do. So we kind of started social distancing. We kind of
Right.
started going out less, and so we were a lot faster off the blocks, and that's why even though we are 3 months in total with COVID-19,
Right.
we've got 1,000 cases.
Wow, that's
And for a place
amazing.
like Hong Kong, so compact, right?
Yeah.
You can imagine the numbers here should be a lot
Yeah.
higher, but
Yeah. It should be a lot higher
1,000.
than that.
Yeah,
And you guys are right beside China. Is the doorway.
absolutely, absolutely.
So yeah, did Hong Kong block visitors from coming in from China and all during that time?
No, but we imposed. I think it was initially was a 7 day, then eventually became a 14 day self quarantine.
Okay.
So the our Chinese brethren, so to speak, can still come through Hong Kong.
Right.
And then eventually it was, I think, last month that we blocked all foreigners
Okay.
again, except the Greater China Group, which is Taiwan, Macau, China, and Hong Kong. So there was
Right.
still free movements, but with 14 days quarantine. Anybody else from outside this four, they're not even allowed to enter.
Right. Right.
Yeah,
Oh, looks like the measure worked. The measures actually worked.
yeah, yeah,
Yeah.
yeah.
For less than 1,000, like, and being so near to China, and y'all did really well there.
Yeah, yeah, fantastic. I think Hong Kong done well this time compared to SARS last time.
How was SARS? I mean, compared to this episode, how was SARS before?
SARS was a lot worse in terms of the number of people who died.
Right.
The Because we didn't know what to do. I mean, the first time, right? It's
Ah,
the first time.
yes, yes, yes.
We were hit by the avian flu and that kind of thing before, but it wasn't really anything serious. But when SARS came, we didn't know what to do, and there was, people were getting hit and then getting infected, and then people were dying, and that
Right,
was that
right.
was that was that was the experience that made us this time. So we are miles ahead of SARS compared to the last pandemic here in Hong Kong.
Right. So experience actually works, lah.
It does. It does. I'm
Yeah,
sure next time if you have anything like this again in Malaysia, you guys will do better too.
definitely, definitely. We wouldn't want
Yeah.
something like this to happen again. So our friends who are here watching the show today, we
Mhm.
have Max Day, or Kim Seng as he's popularly known also.
Hello.
Uh, he's actually an investor for over 2 decades, based in Hong Kong, but he has an office in Malaysia also. And a small trivia that a lot of people don't know: he's actually a Malaysian, but has been living in Hong Kong for a really long time now. Okay, so we go back more than 20 years when Kim Seng used to come down to Malaysia, and when during the early dot com days, right? If
Mm.
I'm not mistaken,
.com one.
99 dot com one, dot
They
com one.
call it.
And he used to do the functions called the first Tuesdays, and that's where I actually met up with him on one of the events, and then we
Mm.
kept in touch. I was also running a startup at that time, and since then, Maxstay has actually grown quite a lot and is invested in a lot of companies, and they're doing very well. He still has an office here. Later, he will share a little bit about the process and all. Okay, so today he's here to share how companies can use venture capital and equity crowdfunding (ECF) to supercharge your growth. All right. Over to you, Kim Seng. Would you be able to share about this?
Sure. Clearly, currently the market condition is not great.
Yeah.
But even in situations like today with the lockdown and the economic downturn, it's still a fantastic time to go raise funds. And the good thing about venture capital, I'll talk about ECF later on. The good thing about venture capital is the funds are illiquid. Okay, so when it's raised, therefore the money is available and it's available anytime. It's not like stock market portfolio, for example, where in the crash that we saw 3 weeks ago when the market dropped 20 to 30%, there's an exodus of people who leave the market and maybe even take money out of an investment fund. Venture capital funds are not like that. Basically, you are the money is put into a fund for someone to manage, and typically you'll be looking to manage it anything between 5 to 10 years. So downturns like this, it's not time where people withdraw money from the VC industry. The good thing is therefore money is still available, and investors are continuing to invest. So if your business remains intact and good, in terms of your business model and your people, and the rest of the stuff that goes around what a good business is, then it's a good time to go out and talk to a VC or equity crowdfunding, which is ECF, to go out and raise funds with the crowd. But in the current condition, probably I say for the rest of April, maybe even a part of May, it may be a bit more challenging to raise ECF crowdfunding because you're raising from the average folks like you and me out there who are subject to the market elements, the panic, the fear, and all that. So tendency is the individuals are more likely to say, let me keep my money safe in the bank in the current conditions. But the VCs won't be. The VCs would be quite willing to look at businesses right now. So for the ECF, probably a bit more time. I'd say May, June would be a good time where people will be more willing to invest into SMEs and startups again.
Got it.
So, it's if you've got a good business, go right out and talk to VCs, talk to us, or if you have a bit more time, try out ECF. The process of going through a company and going through a business plan, preparing you will take 1 to 2 months. So by that time, the market will be open again. And how you use the capital, what I like to call growth capital, whether it's venture capital or ECF, how you use that to supercharge your business. Clearly, if you have a good business proposition or an existing business that has the need to grow, which could benefit from capital to be able to grow faster, fast track, then you have a story that could justify why an investor coming to you. Now is as good a time as any to go talk to investors.
Right. Okay. what are some of the things that investors? Okay, I think let's just answer some of the basic questions also. I know Kim Seng, you were sharing with me yesterday that you have over 20 years of experience, and you don't know which are the details to talk to. Sometimes different levels of people coming in at different needs, right, for the company. So maybe I'll ask some basic questions first, right?
Sure.
What are some of the key ranges of investment for companies that are going? The difference between like seed capital, Series A funding, Series B, and all, and when do they come in, right? For the benefit of everybody here today.
When do who come in?
These companies at different levels, when do they seek for seed funding, and what is the size of funds in seed funding? What's the size of funds in Series A funding, and all?
Okay, that's a difficult question because it differs in meaning. Series A,
Right.
for example, differs in meaning in a Southeast Asian round versus a China round, for example, or US
Right.
round.
Yeah.
But in general, I think you'd be looking at, if I break it down into broad category,
Right.
the startup capitals would be the seed stage.
Yes.
Typically you're looking at sums that's in the tens of thousands up to a few 100,000 ringgit.
Right.
Yeah, so I'm just talking in Malaysian terms for now.
Yes. Yes.
And then from there, you can bring in angel investors who are high net worth guys. They could plug the gap between a seed round and a Series A. So those guys typically hundreds of thousands, and then you go to Series A, which would be the VC type, the institutional investors, and those typically start from 7 figures onwards. There are some VC who play in the seed stage, but most VCs would be in the 7 figures on above kind of Series A size, and then of course you got Series B, C. It goes much bigger than that. Again, different region have different size. But I think Malaysia, you rarely see C. A is quite common. Typically, when you get to B, you'll be looking at regional VCs. That unfortunately, even in that number of years that you and I have been in the market, there aren't that many VCs in Malaysia. There's been more recently, but there aren't that many in Malaysia. There aren't that many, particularly, who would be able to do 7 figures investment in any case. So typically, when you go to B, you'll be looking at 5 and above, 5 million ringgit and above. Typically, even more than that. You'll be looking at regional VCs already.
Right. So when you say regional
Then
VCs,
on the other side is the company. Which
go ahead.
company and what size are you? So if you're a real startup, then you'll be looking at a seed stage. Yeah.
Right.
Pre-profit, pre-revenue company, you'll be looking typically at the seed right up to angel investors in hundreds of thousands. And then once you have some product, typically already have some traction that you can prove your product can sell and you can go to market, then you're likely to be going towards the Series A kind of investment.
Right. There are only, from what I know, there are only a few Series A investors around in Malaysia, right?
Yes.
Mm.
Yeah. It's growing. Last few years, I think last 5 years, it's been very active. Quite a number of new VCs sort of popped up, and most of them are in the ecosystem, which is still in the hundreds of thousands kind of investment. Sadly, the bigger ones are still not too many, but there's plenty in Singapore though.
Singapore, there are more, right? In the Series A. Right. Okay. So there are some questions coming in also. So we will just answer some of them as we go along, right? So from GD Naidu, right? Good day to you both. Good topic to discuss. And then a question is, does Asian VC really understand investment? Does Asian VC really understand investment? Or are they just money investors or visionary investor?
Good question.
Okay.
I wouldn't dare speak for the whole Asia because again, it's very different. China is a world of its own. The whole bunch of VC there, they behave in a very different way. Valuation metrics are very different. So if I think specifically about Southeast Asia, which now it's a cluster of startups as well as a cluster of investors. Well, I guess there are many VCs, particularly the younger and new ones, who tend to be, I guess, more money investors, because just like, if you come out to work today, you're a new guy, you need to gain experience,
Yeah.
unless it's a new VC, but in the sense of the people who manage it are very experienced people, then of course you don't have the startup VC syndrome. But
Right.
if you're in the startup VC syndrome, then yes, these guys tend to be more money minded. So I wouldn't say in Asia, therefore, there's just no good VC. That there are, of course, there are.
Right.
And it's, again, sad to say for a Malaysian, I'm still Malaysian, even though I've left the country 30 something years already. But sad to say for Malaysia, there aren't that many visionary great VCs. There are, but there aren't that many compared to, for example, Singapore. Just talking about Southeast Asia, leaving Hong Kong aside, leaving China aside for now, because I say it's a different kettle of fish altogether. But if we just talk about Southeast Asia, then clearly there's more in Singapore, and there are more and more also VCs popping up in Indonesia in the last 5 years again, because of the size of the market. As you know, the Indonesian market is quite huge. Potential right now, it's not that great in terms of the spending power, the purchasing power of the citizen, but Indonesia has huge potential, and therefore there's been quite a number of VCs who's been very focused and started shop in Indonesia as well.
Yeah. In fact, we have some visitors coming in from Jakarta today also to listen to what you're going to say. Right?
Oh, right.
Okay. So they're also asking, how to pitch and all that. So maybe later you can share a little bit about that.
Yeah.
So we have a question from comment from Joel William, right? So hi, Mr. Tay. If I recall, Netrov's one of the earliest to invest in Howitt. Howitt is a listed company right now, right? If I'm not mistaken. Okay, more than a decade ago, and Howitt is a success story today in Malaysia. Do you see yourself investing in similar companies in Malaysia, focusing on biotech-related companies?
Yes, I think we will invest with. Okay, so how we're set up is kind of different from most VCs that people are used to knowing. We are more a family office type. So we don't have a charter as such that tells us we must start investing now and then stop investing year 7 or year 9, whatever it is, or that tells us we can only invest in certain sectors and not the others, kind of thing. So we don't have those kind of charters that restrict us. And because we are more family office type, we're free to invest anytime. So the money does not have an expiry period. Like, if I manage a fund that's got a 7-year life, in year 5, if I invest in your company, in year 7, I have to get out no matter what, because I have to liquidate the fund. Typically, of course, there's more extension and stuff like that. But so we can invest in anything, and we don't have time restriction. So we're very opportunity based. So if something comes along, we look at it, we like it, we will invest in it. So it goes to, I guess, our philosophy in investment. We have a philosophy that's called the 5 Ps here. 5 Ps of our success and investment. So the first P in the 5 P is the passion. Some people define it as the problem, but we look at it as passion. Which is, if you come to us like your Cyrus Lab 20 years ago, and maybe I should mention the name,
Okay.
So somebody comes to us with their business. The first thing we will always identify is your passion. Some people, as I say, define it as the problem that you're trying to solve. Something that we share. And if we don't share that passion, we will not invest. So that's our very first quote unquote P, first P of a success, or first test in our the philosophy.
Right.
So coming back to your question from our friend out there, yes, we can invest in anything as long as something that we share passion with, and to share the passion is something that we need to understand. Yeah, the good thing is we've been around 21 years, so we've seen the industry, we've seen the investment industry for quite a long time. Therefore, we've seen many industries and sectors. So we do have a broad understanding of many sectors, including biotech.
Right. Okay. Maybe since you already shared about the first P, right? What are the other P's that your company looks for?
Okay, so the second P is really people.
People.
So if you've got a passion, which is the business that we share and we like and we understand, then clearly it's the people that we look to in terms of being able to, I guess, pretty very simply, have a chemistry with her. It's important because the way we work, the business model that we work is different from many VCs out there. Typically, I like to differentiate the spray and pray guys versus our method, which is very hands-on, working very closely, almost like part of the team with the entrepreneurs. So we are very hands-on, a lot of value adding, very involved participation kind of VC. And because of this, the people and the chemistry is extremely important, because then we can bring everything we have to bear, our network, our knowledge, of course, our money as well, to be able to work with the team, which will then lead to the third P, which is delivering performance. That once people are empowered and they can work together, we can work towards delivering performance together. And then eventually the fourth P is profit, to be able to make profit together from this thing that we all put our efforts in, work together, and achieve success. And the fifth comes to what we call personality, which is effectively the character of a person. So if you look at the 5 Ps, it goes back to the second P, eventually the people again. But this personality, enrichment of personality, is different because it's about the experience, the walk that, typically an investment would take years. Yeah. Especially if you're a startup, it could take 5, 10. I remember our longest investments like 12 years.
Wow.
So you're basically you're in bed with someone for that long. Yeah.
Yeah.
That fifth P is about enriching the personality mutually. As we learn from you as an entrepreneur and as a person, we share our values, our belief, our way of life with you as well. So both mutually enriching one another. And that's the fifth P, the personality.
Okay. So, what are some of the companies that you have invested in? Some of the the good stories that you have. Would you be able to share some of them?
Yeah, sure. Most to most of you in Malaysia right now, you probably know a company called Eat Cake today. So that's a basically e-commerce cake platform, like a sharing economy kind of basis. So they own the platform they develop, bringing bakers, a lot of bakers, whether it's institutionalized, corporatized, or home bakers. There's a lot of home bakers out there. And these guys basically have skills, but they don't have access to the market. So eCake today basically help them to connect, on the one hand, the bakers who have good skills, good product, but they can reach out to the market with building the market on the other side.
Right.
So, for example, this companies we've done the investment about 3-4 years ago, and it's going really well. Recently, with the MCO and COVID, they've done even better.
Oh.
So, because a lot of people can't travel, right? So they go
Yes.
online to buy stuff. So they go buy cakes from an online shop rather than going to say a secret recipe and buy a cake. You can't do that right now.
Yes. Yes.
So an example would be something like this. Another one that's also in tech that we do is online education.
Right.
That's also done better in the last few months because clearly, again, people are looking for online education because the traditional going to tuition classes and stuff like this, it's a bit challenging right now. So that's in math education called
Oh,
ZZ Math.
Zap
So
Zap Math.
yeah, ZZ
Okay.
Math. So that's
Okay.
also doing pretty well. Then of course outside Malaysia we have investments in China, in Hong Kong. So various different types of investment. We got biotech company in China. That one is affected negatively, I should say,
Oh,
recently
okay.
because they're selling. They got retail, they got shops, and because of the COVID thing, it's been affected.
Right.
So I guess a variety of businesses, and then we got quite a number also that's adversely affected in Malaysia. That's in F&B.
F&B.
Yeah, so we have investments in various F&B chains in Malaysia, and that's been affected quite badly recently as well. But this we're riding through it together, coming up with new strategies, thinking with these companies along, working with them on new strategies, how to cope with the fact that there's social distancing, cope with the fact that people can't go out and dine out. So we turn a lot of our shops into delivery sites.
Right.
So we get our people to still cook, then market the product and market the meals, and then
Right.
get it delivered to your home instead of coming to the restaurant. So there are
Right.
creative ways around this that we are coping, but still, of course, the result is never the same as when the shops were all open and people can come in, tons of people that can come in and eat in the restaurant. So it's still adversely affected, but there are ways that we are coming up with that would soften the blow, so to speak.
Right. I noticed that in your case, right, in for Netrove, you all have invested not only on pure online startups or companies, you all have invested in brick and mortar companies which has brick and mortar. Am I right there?
Yep, yep, yep. But the F&B companies that I talk about are certainly bricks and mortar because they're not tech. Um, we used to be pure tech
Right.
long time ago. When we started about 21 years ago, we were pure tech. That's when I knew you.
Yeah.
And I think we started moving into non-tech probably about 7, 8 years ago. Because opportunities came to us, as I said, that we looked at and we say, actually, this looks quite interesting, sounds quite interesting, and then we develop an interest in them, and then basically just started investing into non-tech. So now we probably have, I don't have an exact percentage, but maybe 30 to 50% of our investment are non-tech nowadays.
Right. Right. It's quite diversified, I would say, right?
Yeah, yeah.
Mm.
I mean, that's why I say the good thing about us is we're not restricted by any charter or rules, so we can do whatever we want. We even have investment in hospital, for example.
Right.
You heard of Beacon Hospital?
Yeah. Beacon in Malaysia, right?
Yeah, yeah.
Right.
So that's also one of our investments.
Right.
So that's as brick and mortar as you can imagine.
Yes.
Uh,
Pure brick and
and
mortar.
yeah, so because they were looking to build a hospital that's, I guess, specialist hospital providing affordable specialist services to the folks, and we thought that was a fantastic idea. So we backed them.
Right. Okay, so for friends here, Max Tay is here, right? He's here to talk about venture capital, equity crowdfunding, and how it's used to grow your company, right? So if you have any questions, just drop them here anytime, and then we'll help them. We'll help get them answered, right? Max, I just wanted to ask you. So in this whole funding cycle, right? How does the, this is just for the basic question, another basic question. When companies start, why do they need venture capital? Why can't they do it themselves? And how does venture capital come in, and what's different? Would you be able to explain? I know this is a very basic question, but some people are also asking about this.
Sure. Why do you need venture capital? Well, I think the simplest answer to that is most people don't have the capital they need themselves. Yeah.
Right.
A lot of entrepreneurs start very young. You started very young when you started your company. You were probably early 20s. Yeah. Most people at that age, unless you were born with a Li Ka-shing as your father, you don't have money
Yeah.
to start up your own business. Yeah, you
True.
may have a little bit of money, but that can
Yeah.
only take you this far. And then
Yes.
from there on, next question is, okay, this thing seems to work. I bootstrap with my money. Maybe you can get some from my friends, families. But again, the not everybody has got Li Ka-shing as a father. Therefore,
Yeah.
the availability of this money from what we call the 3Fs, the friend,
Right.
family, and fools,
Yeah.
kind of limited.
Right.
So then beyond that, what do? You have to go out to the funding ecosystem, and that's typically
Right.
how people go in and either talk to. Right now, you have a new choice from 3 years ago, which is ECF, equity crowdfunding, which
Right.
wasn't an avenue until Malaysia created the fintech industry.
Right.
And then, of course, venture capital, which has been around for a long time. So typically, these are funding sources in the funding ecosystem that allows you to be able to raise the money to be able to go fast track and achieve your business dream, so to speak.
Right. So what is the game, these companies should play when they have a venture capitalist coming in, right, to
Mm.
invest in the company? So let's say they have done their beginning, uh, bootstrapping, using their own money, using, parents' money,
Mhm.
using friends' money and all. And then they go on to angel investment, which, between 300 to 500,000.
Yeah,
And then from there, they go on to like Series A investment, like, 1
yeah.
million, 2 million, 3 million, right?
Mm.
So how does the venture capitalist benefit, and how does the company benefit from this? And how does the venture capitalist exit in this game?
Sure. Mm.
Yeah.
Um, think looking at it from the company's point of view first,
Yeah.
continuation of what I was saying just now, the company benefit from the capital that's injected into the business so that it can achieve its goals, its expansion plan, hopefully something that's interesting, exciting with a lot of scalability. So it saves time instead of not having capital, maybe growing to your plan of point A to point Z, taking 5 to 10 years. With venture capital, likelihood is you shorten it to by half, hopefully by even more than that. So depending on the ability and the business model, the benefit of to a company in raising venture capital to fund the business is to be able to fast track the growth with the money that's injected. And also, if you're lucky, you get some really good VCs on board, then you're likely to find that they can add value more than just giving you money.
Right.
They can open up their network. They may have their own portfolio companies that's synergistic with you. So there's a lot of things that you could derive more than just the money that they put into your company. So it's what I call dollar plus. The
Right.
plus, how much really depends on which VC you bring on board and how they can work with you to be able to synergize and therefore add more value beyond the dollar that's put into your business. Yeah. So looking at it from the other side, from the VC's point of view, of course, the VC is a financial investor, and whatever they do, don't believe, never ever believe that the VC loves you. So no. The VC doesn't put money in you because they love you. No. The VC puts money in you because they are financial investors, and
Yes.
they manage a fund, and
Yeah.
therefore they have their own KPIs to return on investment on the fund. So let's just
Right.
say a VC starts with $100 million fund.
Right.
They need to invest, and in a matter of the X period of years, typically 7 to 10 years, the money goes into various startup companies, and then basically they exit, eventually selling their stake back to either the entrepreneurs or to another investors, or through a trade sale sold to a buyer, or through an IPO. These are the common methods, yeah. And then basically they get back their money, and hopefully the 100 million turns out to be 100 million plus, not 100 million minus. Okay, if it's 100 million minus, that means the funds lost money. If it's 100 million plus, then it makes money. The question of how much money it makes over how many years, that's when the calculation of the IRR and return on investments are all done at the end of the fund period. So from the VC's point of view, typically it's what they benefit is really making taking a bet on a company by investing into them and making money from that, and therefore making a good return, because then the investors in the fund get to take their money back with some return, and then there's always a sharing, it's called a carry interest, that's then shared with the VC fund manager.
Right. So that's interesting, right? And also I've also read some statistics, and some VCs have also told before that out of 10 companies they invest, right, 5 fail horribly, 3 just survive, cukup makan, and then 2 of them will succeed, and that is enough to create the whole positive return for the investor. Is it right? What are the real statistics?
Pretty much, I can talk about more specific, but I think pretty much what you say is ballpark there. That most VCs would bank on one home run, which gives you, at least hopefully 10x. So you imagine you've got $10 in your fund, nine died, you invest one in each, 9 died, so you lose $9. But that one that wins give you a 10 bagger, which means 10x return. You get back $10, so you don't lose money anymore. But if it gives you 15 bagger, then you get 55 ringgit on top. So now you're 50% up on your total fund. Okay? So it's same thing. So if you now have 2, then depends on how many x return. Whether it's a 10 bagger, 15 bagger, then your fund grows in size. So typically, you're right to say ballpark. A VC, because they take risk in high risk investments and businesses, they do tend to see 50 to 70% of their investment dying.
Right.
Well, dying in the sense that they don't get money back. Right? The company may not die as such, but some of them become zombies. Yeah.
Right.
Like you cannot exit as a VC, you cannot exit, but they're still walking around. But you really can't make money out of the investments.
Yes.
Yeah.
And you still have to support them, lah.
Until you don't want to, I guess. That's why I say this is not like a child. If you're my child, however bad you are at school, however bad you are at university, I still have to support you because you're my child. But no, there's no love for companies as far as
Well, thanks for being so frank and telling the real story. That's a real story people should know out there.
Yeah. Don't there's no emotion. There's just don't think that VCs can fall in love with you.
Right. Yeah, absolutely. All right. So there's another question here, right? First, Joanne Tay has said hello to you.
Hi.
Joanne Tay, she's a student. Okay, and GD Naidu, another question is, how do you see the digital financial sector in the coming year, and what's your take in it?
Digital financial sector.
Digital banking and all. I think that's what he meant.
Well, I guess if digital financial means fintech, because I can't imagine it to be anything else. But if it's digital financing means fintech, digital banking, like you say, all the payment gateway, maybe even cryptocurrency sort of stuff, blockchain. This all got huge room to grow and to evolve over the at least next 10 years, maybe even longer than that. Blockchain is a fantastic new revolution. Just like internet changed our lives from 20-something years ago, blockchain has the potential. I wouldn't say it has, but it has the potential to be able to change the game one more time. And a lot of people are pursuing it right now. So if you think in terms of fintech, built either on the internet world or the blockchain world, there's plenty of room and it's worth investing. Since Joanne is a student, investing your time to learn about these segments within the digital finance or fintech, as I would call it, and maybe even become an expert in one of these things.
Right. Okay. So what do you see as the difference, right, in investment scene in Malaysia, Singapore, versus like Hong Kong, China? You said like they're a different kettle of fish. What are the kind of returns? What are the kind of size? How I think what are the rates of scaling up and all? What is the difference between here in Malaysia and those countries?
Okay, well, first, if we talk about ECF,
Yeah.
Malaysia has got ECF. Singapore kind of have a form of ECF. Hong Kong doesn't have.
Okay.
China has illegal ECF.
Malaysia.
So ECF, Malaysia has done well by creating a fintech industry very quickly and legislating it. And so that's something that Malaysia has done really well. And that's why we're trying to turn Malaysia into an ECF hub for businesses in Malaysia as well as business from outside Malaysia to come and raise ECF through Malaysia. In terms of venture capital, then the main divide, I guess, between North and Southeast Asia in Southeast Asia, typically the deals are a lot smaller until deals like Grab comes into play. You rarely hear investments in Southeast Asian companies that's exceeding $100 million.
Right.
Rarely, yeah.
Yeah.
Grab has got more than billion. It's not just 100 million, more than billion. So therefore, until Grab, there were very few companies that VCs would look at investing in. As I say, even in the hundreds of million. But deals up north here in Hong Kong, China, even Korea, Japan, typically you're looking at deals that's easily in the tens of million US dollars, going to a few hundred million to a few billion. Of course, always in the billion league will be smaller, particularly in China. The billion-dollar deals are quite prevalent nowadays. And if you then look at the underpinning factors, then of course, because the market here in China is a lot bigger, just like Japan, also quite big. So therefore, the deal size tend to be bigger. And the same, I guess, the same phenomenon we're seeing in Indonesia nowadays, because Indonesia again is a huge market with huge potential.
Right.
And, investments in Indonesia now are getting bigger and bigger, and the ticket size is also getting to be, in the tens of millions nowadays. More and more common in Indonesia now. So that's the big divide. And then, of course, you look at industry. Yeah, tech industry in China is very well and alive. There aren't, unfortunately, very many tech deals in China that's like so inventive, like somebody thought of something so new. A lot of it is very much Me Too, based on something that the US, the Americans have done well, and then just basically copycat, just like Grab. Grab is the same, right? Copies Uber, right? So China, a lot of it is also very similar, and then they tend to take the basic idea and then go in China, adapt, and then tailor make that solution. So an Uber in China would look slightly different from Uber in the US, but still Uber, basically.
Right. Yes.
So I guess, yeah.
Okay. So, okay, there's a question again from Mahindran. He said, "Hi, Max. Dilution of founders' equity is one of the more important terms during VC investment, right? Basically, VCs take equity. That's, I think, the summary, right? And then also something that the first-time founders have challenges to understand. How do you approach the dilution topic? Any standard formula?"
Pick up 3 dice, throw the dice.
Okay.
There isn't a scientific way, and
Right.
this, especially if you are a startup, and your our guy here basically asked a very good question. If you're a startup and you are pre-revenue, there isn't a way scientifically to measure and value you. It really is a matter of negotiation and discussion. Sitting down with your, whether it's an angel investor or your seed investor or your VC, and trying to bring the best of your business out on the table, so that the other side understands what it is that you've got, and why certain value that you wish to ascribe to yourself, and therefore affecting your dilution, is justifiable. So I can give you a ballpark that people typically would say, if you're a startup, you'd be valued between, say, 1 to 5 million ringgit, but that doesn't help you too much. Okay, so you really have to put your whole business plan, including key elements like who are the founders, your experience, because if somebody's investing in a very early stage startup, it's very much you, the person that they're looking at, to see what experience you've got, what's your core skills and abilities that would be able to put to good use that this business plan that you put on the table can materialize and succeed. So it's down to you to do that sales job, so to speak, to convince your VC and say, give me 1 million and I give you 10%, or give me 1 million and the guy will ask for, say, 30%.
So it's just how you sell it to the investor, basically.
Because there's no scientific rule. But when you get bigger, yes, when you do get bigger and you have got more traction, you've got more financials, information available, more performance metrics, then there is easier correlation between another VC deal or another listed company to be able to say, okay, you should be worth $30 million now.
There's a comparison there.
It's very difficult.
Right. Okay. So Mahindran, I hope that answered your question. Okay. So Munira Louis, right? She asked, "Hi Max, what are the typical industries that will now attract VC's attention?"
As of this moment, I think anything you touch that's in medical, healthcare, sanitary would be good. But if you think in terms of longer term, take away the MCO and all these challenges that people are facing right now, I still think that the technology sector, it's still the best, because technology has a lot of scalability. Okay, but naturally I'll say that because I'm a VC at heart. Okay, so I want to take bets with young companies that's got huge potential to scale and to be able to impact the world in a tremendous way. So technology, definitely one sector. So particularly technology, be looking at stuff that's AI stuff is fantastic. Blockchain, I talked about that just now. Fintech's another segment. And then if you want to get even more serious, of course, you can look at stuff like robotics, EV, electric vehicles. Not going to make another Tesla, but there's a lot of things around the ecosystem in the EV industry that would be interesting to look at.
Okay. All right. So I noticed that you mentioned the word scale, right? So what do you mean by the word scale? Like, investors coming in and scaling up fast. What do you mean by that?
Okay, scalability, it's something that, let's just say if you're doing 100 million sales today,
Yeah.
and let's just say somebody puts in another 50 million capital for you. If you are just growing the 20-30% growth, that's just growth, maybe even high growth. but that's not exciting. Scalability is where you can hit a hockey stick curve, and then suddenly your 100 million revenue becomes a billion in a matter of X period, again, depending on business and all that. That you're able to scale it a lot faster. For example, a simple example would be a software that you develop and that could be used by folks all over the world. Okay, so putting some money into you, a Series A, B, or C, that allows you to use that money and become and market it throughout the world, because your product is effervescent, it can go to anywhere in the world, allows you to be able to scale with the money being invested into you, and basically grow the company, 10x, 50x, 100x, depending on how successful your marketing and business development strategies. So that's what I mean when I say use the word scale.
Right. Okay. I think that explains it very well. I think a lot of people are also used to the slow growth, which is like the 20-30% growth. And when VCs come in, I think the expectations are a lot higher to scale this way, right? 10x, X, 50x, and all, right? Over a period of time, 2-3 years, 5 years, and all, which I think can't be ever achieved with normal funding or what you call organic funding, right?
Yep.
Okay, so another question by Munira Louis. With the impact of global economic downtrends and COVID-19, how do VCs conduct their valuation of a company?
Good question. And I guess in a market condition like this, clearly valuation will be depressed. Just like the stock market, share price will be depressed. And that it reflects the sentiment of how the market is the capital market, whether it's the investment or the stock market, reflects to the underlying economy. So yes, in current conditions, for sure, investors would be looking at businesses being valued at a more reasonable or lower valuation, if you like, compared to before the crisis. And I think this environment will probably prevail at least another 3 to 6 months, maybe even until the end of the year.
Got it. Okay. Hope that answered your question, Munira. Right? Okay, Kim Seng, could you also share a little bit about how ECF or equity crowdfunding works? Because it has been here right now in Malaysia for, I think, the last few years.
Yep.
And I see you very often in the scene, in the
Yeah.
ECF scene, right? So would you be able to share a little bit about how it works and what those investors, what is the kind of fund size and all that people can raise with ECF?
Yeah, sure. Yeah, you're right to say that you see me more often nowadays, and that's unfortunately I'm a reluctant guy because in my VC business I don't need to come out and talk to people. People come and talk to me because people want us to invest in them and all that kind of thing. So I happily kept low profile for many years. That's probably also why we kind of lost touch for many years. And got involved with crowdfunding, ECF, about 4 years ago when the government was mulling the fintech industry, and we were very much part of the team that consulted with the government to get the CMSA amended. So brought a breath of fresh air into the funding ecosystem, added a new angle, clearly, of ECF as another alternative funding sources for the startups and SMEs in Malaysia and hopefully one day in the region. And how it works is basically, on the one hand, you have startups and SME again, who prior to ECF would go to the guys we talked about, the 3Fs, the incubators, the angel investors, blah, blah. And then now you have the crowd, on the other hand, basically putting these two together, bringing the power of the crowd to play. Okay, so imagine I always use this number, and I'm personally very excited by it as well. There's 15 million out of 30 million people in Malaysia that's called the working class, or what I call investment class. Yeah.
Right.
If you think each of these 15 million guys put 1,000, just 1,000 into ECF, that's 15 billion ringgit.
Yeah, 15 billion.
If you increase that to 10,000, you can do the math yourself.
Yeah.
So potentially, the power of the crowd in Malaysia, my own estimate, it's easily 300 to 500 billion a year.
Wow. In Malaysia alone.
Yes. Okay. Of course, it takes time. It takes time for us to develop the market, to be able to go out there and build the community and raise awareness so that more and more crowd people like you. Have you invested into crowdfunding so far?
Not yet.
Oh, come on, Biasa. Come
Soon.
on. You gotta invest through us at least.
I have to talk to you after this.
That's look, you are the educated type, the professional type. Those you're plugged in the market, and yet folks like you don't even have the connection into ECF yet.
Right.
So it's still early stage, and we're trying to build this community so that people are more aware about ECF and the potential of ECF and how they can use that as an investment class. Just like putting money in your stock market, putting money in the bank, putting money in FD. So ECF is another channel where people can put money in and be able to invest and make money. Okay. So it's bringing a power of crowd to play to be able to fund the SMEs and startup. Okay. And so as a platform, we enable this. We are licensed by the SC, and we enable it. The platform basically bring together the community, the crowd community, and the companies, startup and SME who wants to raise funds, and basically connect them and then make the transaction happen.
Right. So what are the kind of funding typically that the size of funding that people raise through ECF or equity crowdfunding?
It's when we started 4 years ago, it was in the hundreds of thousands. Now it's getting to in the 1 to 3 million range. So deals, the market has moved on. Yeah, so deals are getting bigger in size.
Right.
The current limit under the SC guideline is 3 million per company for the first year, and then 5 million per company for the entire lifetime. But the SC is looking, we've been in consultation with the SC, and that number is likely to be lifted. We don't have confirmation yet, but there is clear intention that the SC is responding to us as the market operators to increase that limit. So we hope to hear the good news from the SC soon that the amount will be lifted, then we can do bigger deals for SMEs and startups.
Right. So what you're saying is through the ECF, the common folk can invest in a company, can sort of like buy into a company.
Yes. Right? So there are a few types of investors, what we call crowd investors. There's the retail investors, and they can invest maximum 5,000 per company, 50,000 a year. Then there's the angel investors, who are bigger ticket investors. They can invest up to 500,000. Then there's the sophisticated investors, which once they're registered with us as a sophisticated investors, it's unlimited amount that they can invest. So all these form the crowd investors, and more also some corporates and institutions are also investing in together with the crowd into startups, but through the crowdfunding platform like crowdplus.asia.
Right. So people like common people, they can invest up to 5,000, and then angel investors can invest up to 500,000, and then there are the more sophisticated ones who can invest unlimited.
Yes, and the good thing is the starting ticket is $100.
$100.
Yeah, you could easily just say, okay, I invest $100 into a company, and that's it. You are a crowdfunding investor already.
Right. Okay. Cool. So I think I want to invest into a company called Netrove Capital.
We're not crowdfunding yet. Once we're crowdfunding, I'll let you know, Vesa.
Okay, I got to invest in the main fund. So that's interesting. What is a typical timeline for someone to raise crowdfunding? How long does it take?
Okay, so our process, typically we look to close a deal within 4 months.
4 months.
And yeah, from start to end. So
Okay.
if somebody comes along and their information is in good shape and they are also very responsive and can work with us closely, it's possible to do it faster,
Right.
say 2 or 3 months.
Right.
Anything faster than that would be difficult because we are regulated by the SC. So therefore, with compliance things, disclosure, documentation, that easily will take a month or a month plus.
Got
And
it.
then once it's ready, we then need to go to market and do marketing, talk to investors, talk to the crowd, do pitches and stuff like that. So I think the fastest 2 to 3 months. But if the company is not very responsive, then it may take up to 6 months.
Right. Got it. And what is the kind of, because in this case, right, it's a very unique thing where you have a lot of small investors and also like medium-sized investors coming together, right? So
Hmm.
how does equity work? How do they take equity and who's managing the whole thing?
So we, as the Crowd Plus Storage Asia, as the platform, facilitate that. So let's just say, take a simple campaign, our recent one, which is the Feifei Crack, it's a F&B restaurant.
Right.
They raised 1.2 million ringgit through us,
Okay.
and out of that, it was funded by about 175 investors. So the
100.
175 investors ranges from size from few hundred to the bigger ones, tens of thousands. I think the biggest ones maybe was 75,000, something like that. Something like that. I can't remember the amount.
Right.
But basically a mixture of different sizes, and they
Right.
all hold shares in the company. Yeah.
Right.
But they will hold their shares through our platform. We have a
Right.
nominee structure which they will all become the beneficiary under the nominee, under the agreement, and basically the shares in the company, the issuer, we call it issuer, is held by Crowd Plus nominees, which is our nominee company.
Right.
So as far as the company is concerned, they deal with one single shareholder on their register. So they don't have to worry about 175 people to deal with. We, Crowd Plus nominee, which is a subsidiary of Crowd Plus, the platform itself, will then deal with the 175 investors behind
Right.
the ECF deal. So that's typically how a deal is done. And we would manage this relationship on behalf of the issuers so that they can continue to take the money, focus on what they're supposed to be doing, which is building the business, and hopefully continuing to give good returns to investors. And then basically we pass on the benefit to the investors again.
Got it. Got it. Okay. So there are a few more questions coming in, right? Uh, is this a good time to buy or sell businesses from Munira Lui?
Selling a business, definitely not a good time.
Really?
Because it's
Really?
downtime. Buying business, yes. If you got money, you got cash, and you're investor, your cash up, then this is a fantastic time to go in, either invest or buy businesses. But sell, not good time.
Okay. Another question by Mahindran. Hi, Max. Talking about ECF in Malaysia, what's the exit option that's available for an investor investing in a company through ECF? Heard rumors
Yeah.
about secondary market in ECF. Any insights there?
Yes. So for
Okay.
ECF investor, typically the deal will when you invest, it will include either a conversion right or a redemption right. Yeah, conversion right means you actually convert into the company and become a permanent shareholder. A redemption right means you actually get your money paid back to you. Okay, including whatever returns that they give you under the terms of the deal, plus whatever interest or dividend that's due to you. So that's all your return. Yeah.
Right.
And then a third way, which has not happened so far, would be an ECF company issuer actually get IPO. Then you exit at the IPO. Okay,
Direct to
so that hasn't happened yet because the industry is still young.
right.
As far as secondary trading market is concerned, yes, it's been in the talks with the SC for about a year now. I think it's likely to come into fruition this year.
So that means in if it means in a clearer way, once someone invests in a company, they can sell that stocks to another third party through the
Yes.
secondary market.
as if it's an OTC market. Yeah.
Right.
So,
Okay.
so secondary market means you can start trading your shares. Right now, you can't trade except if you convert or you get redeemed or there's an exit. Somebody purchased the company or an IPO. Okay, but
Right.
secondary trading allows me, if I say one day I wake up and say, I got 10 shares in VSR's company, I don't like his face anymore. Let me just sell my 10 shares and I put it on the board, the secondary trading board,
Right.
and then somebody could offer to buy it, and that's it. The transaction go through.
Right. Right. Got it. Okay. So, okay, there's another question here. What company would you suggest to invest in at the moment for someone who's interested in investing?
Well, I come back to the same issue, depending on how much you're into profiteering. Yeah? if you're very much into profiteering and like short-term gains, you're very much a punter. Then there's a lot of those that's COVID and MCO related thing that's still going to be pretty good bets
For a
in the
short
short term.
while.
I say at least 6 months, maybe 12 months, they will still be relevant.
Right.
So if you do want to take a punt in this segment, you can.
Right.
But pick a company that is really, really good, that they don't only just do well now, but they can survive in the longer term. For me personally, I always love to get into, which is what I quite heavily into right now nowadays, the F&B sector,
Right.
because I eat a lot. I love to eat. I drink a lot. I love to drink. I smoke a lot. So
Right.
I
Right.
spend
Right.
a lot of time in bars and restaurants.
Good food, good drinks.
Yeah, so to owns a portion of an F&B chain or outlet that I like,
Right.
it just goes very easily with that. So, for example, some of my friends love to eat seafood, so they invest in the Feifei crab chain that we talked about just now. Some people
Right.
love bars; they can invest in. So there are various things that you can do,
Right.
but invest in what you understand. Important, invest in the business that you understand, and better still, invest in a business that you can actually enjoy yourself. Then, you can be part of that business in a way like you're a customer of that.
Right. 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 Okay. So Kim Sing, thanks a lot for your sharing. Right. So just one last question before we finish off today. As you can see, we have already covered more than 1 hour already.
Oh my
You're
God, are you serious?
1 hour 10 minutes already, right? A lot of questions are coming in. So okay, talking about F&B, right? A lot of people go into F&B because they're passionate about it. They
Yeah.
love food. They can cook so well. But I think, from the investor's point of view, we have seen a lot of these actually fail, right?
Mm.
Just because they are just passionate about the food or they can cook well, it's not really enough.
Mm.
What do these F&B people who are going to venture into F&B business, what do they need actually to succeed in the business?
It's not very different from other businesses. I think
Right.
it's a very crowded space.
Okay.
So it's very noisy, and you want to be able to stand out. You need to be able to differentiate. So it's not just cooking good food. Good food itself, per se, it's everywhere, and it's available all over the place. So I think to be able to differentiate in terms of food, in terms of your decor, your whole setting, the ambience, the look and feel. So to differentiate that, to create your own uniqueness and brands is important. And then to me, the second, some people like things, the first most important one, factor is finding the right location, your shop, and whether that locale has all the right community to be able to become your customers. So it's no point, putting a high-end restaurant that costs, 200 per head for every meal that you eat in a kampong area, for example.
Right.
You're not going
Right.
to get many customers. So
Yes.
finding putting the right location for your crowd, because that's your nearest and most available customers. Before people from further afield that you need to market to would come to your location. But imagine if you drive 30 miles to go to a restaurant, even if you like it, you probably go there once a month, maybe once a year, right?
Yeah.
So location to me is a very important thing. To me, the first most important thing is still the differentiation, that uniqueness of the concept, what you're creating, because that will be an attraction. And then the location is the second thing, give you a chance to succeed better.
Right. Got it. So Kim Seng, thank you so much for all your sharing. I think you have actually shared a lot of points, and also like how does it work, the whole venture capital, and also equity crowdfunding. How does it all work? How does it start? Where do companies come in? How do they exit? You have covered quite a bit here today.
I'll
And
send you a bill.
oh, thank you. And I'm going to invest in you. Tell me when you do your own equity crowdfunding.
Don't you worry, I'll get my guys to go sign you up.
Okay, I'm waiting.
Hey, thanks for inviting me. It's good. It's been a good chat.
Yeah, it has been a good chat, really. So,
Yeah.
of course, I think some of them have actually asked about how to approach you if they have a good idea. They want to talk about the business plan.
Yep.
You have shared, and then I will share. You can
Yep.
also look up Netrove Capital. Let me just put up the banner here.
Yep.
Netrove.com, right?
Yep.
Yeah, so you can always look them up directly, and reach out. Max is available in LinkedIn also. You can
Yep.
also write up to him.
Mm.
Look up for his posts. He always posts the latest stuff, ECF and everything. So you make friends with him first. All right. So
Okay.
Kim, anything else you want to share before we finish today?
No, I guess my last words would be, guys, it's tough times. Everybody knows that.
Yeah.
And it's tough for everybody, me
Yeah.
included. Okay, so we're in it all together.
Yeah.
We can get through it all together. We need to just be good, stay home, stay safe, stay healthy, and we will get out through the other end of the tunnel all in good shape.
Yes. Yes. Thank you so much. So Kim Seng, just stay with us. Don't exit first.
Okay.
I'm just going to end the live show right now. So bye bye,
Okay.
everybody. Thank you for being with us.